This one candle setup is the easiest and fastest way to become profitable. I've been using this strategy for the last 12 months, and I've been able to have consistent winning days like this, and this. And today, I'm going to give you the entire strategy step by step. This simple method is going to help you to avoid the mistakes that most traders make, so you can stop wasting time and start becoming consistent with your trading. On average, day traders take 2 to 3 years to become profitable, and it's rarely because they're not trying hard enough. I burned through 5 years of hard work trying to figure this stuff out, but honestly, I didn't need to. If I'd avoided the 2 mistakes that I'm about to share with you, I'd be able to be profitable much faster. And after you watch this video, it's going to speed up your road to success massively. So mistake number 1 is that most traders are just too scared to lose. After most traders take a loss, they don't just shake it off. They end up carrying that loss in their head. And not just that loss, but all the old losses that they've had as well. That feeling of losing or doing something incorrectly gets in the way of your next trade before you even hit the buy or sell button. And I know this because that feeling had me in a chokehold for years. Instead of just following that clear process, you end up trading from a place of fear. And every trade feels like it has to be a winner. And when you start thinking like that, you stop executing properly on the charts because all you're doing is just trying to win rather than following a process. When I started out, I was blowing accounts all the time. Many years into the journey of trading, I would still get those dreaded liquidation emails. Every time I sat down to trade, I would literally lock up at the charts and even hesitate to take a trade because I was so afraid of losing my next trade. I realized that the anxiety that I was feeling wasn't even about losing money anymore. It was more about my belief in whether I could actually make this whole trading thing work at all. I didn't trust my ability to execute the plan and follow the simple process that I knew I needed to follow. That's the spot that most traders get stuck in, and maybe it's something that you can relate with right now. And the irony is that trading really punishes that kind of mindset. The more you try to avoid losing a trade, the faster you end up losing trades. You don't really need any kind of mindset hack or psychology trick to become successful and become profitable. What you actually need is a working strategy that gives you a process that you can follow, which then in turn removes any emotion that you have from making decisions when it comes to the charts. Because look, when you've got a real process that you can follow, you're not really relying on your psychology or your confidence. You're simply just following instructions. It's almost like trying to build furniture. You've just got an instruction booklet with you, and all you got to do is step 1, step 2, step 3, all the way to the point where the piece of furniture is built. And as soon as you can start following a process that's proven here, that's when the results really come. And that's what you're going to get when you start applying the one candle setup. I'm going to walk you through the setup step by step. We're also going to look at it in live market conditions so you can see exactly how it works with a real life setup. Now, the second big mistake that traders make is thinking that they need to keep studying more in order to get better, all because they feel that they're going to get a piece of information that's going to completely fix everything and change the game. But the problem is you're learning so much information that it becomes really overbearing and overwhelming for you to actually execute on the charts. Learning more isn't the same as becoming experienced. Most traders end up drowning in education, and they know a lot of theory, but they have no simple structure of how to actually use it, and they don't execute and put things into practice. One of the best trading lessons I can give you, which is from the legendary Bruce Lee, and what he said was, "I fear not the man who has practiced 10,000 kicks once, but the man who has practiced one kick 10,000 times." This rule applies beautifully to trading. You don't become successful by collecting more strategies and more models. You become successful by mastering one simple approach and repeating it until it becomes second nature to you, almost to the point where it becomes boring to execute. And that's exactly what I'm giving you in this video. One process that you can use over and over again until you're consistent. So let's get into the strategy so you can learn the full thing. Now, you're probably wondering, what is the one candle setup? Well, it's an extremely simple trading strategy that even a complete beginner can execute this very quickly. And here's something that I want you to really keep in mind as we're going through this, okay? And that is that simple is what gets you profitable, okay? Simple wins. The reason so many traders spin their wheels is because they're glued to really complicated strategies that look cool in premise but don't actually help them or get them the results that they're after. And once you see this strategy executed, you're probably going to feel like tossing your old playbook out the window completely because this idea is so easy. You get your trades done within the first 60 to 90 minutes of the trading day. And if you're still losing money, it's usually because you sit at your screen all day and you get bored and you end up taking too many trades because you feel like you have to be in a trade. You're really not needing to be sat at your desk all day long. And one of the crazy things about this is that the longer you sit at your desk, the more likely you are to actually lose money because you end up getting bored and think that you're supposed to be in a trade. But all excellent traders know when they need to trade, but they also know when they shouldn't trade. And that's a very big lesson. And this strategy pretty much stops you from over trading and having to execute trades when you don't really need to. Now, the very first thing you need to know about this model, it can be applied to many different markets, whether you're trading gold, Forex, NASDAQ, crypto, whatever it is. I specifically am going to be trading NASDAQ on this example, and it's the one that I personally trade every single day. I do not trade anything else other than NASDAQ, okay? The reason that I do that is, again, if you just remember what I said, just keep things simple, right? Simplicity wins when it comes to this. So the less things that you trade, the more chances you have of being successful. If you're one of those people that goes and trades many, many different things, 16 different pairs with crypto, gold, and all the rest of it, you are making things a lot harder for yourself. I would really advocate for you to just focus on one thing. And I only focus on NASDAQ. So that's the chart that we're going to be looking at. The very first thing you need to do is make sure that you are at the chart at the correct time. So this strategy needs to be traded at 9:30 a.m. Eastern time, New York time, okay? That's the time in which we need to be trading at our desk. So I really recommend getting to your desk maybe like 10, 15 minutes before so that you're prepared and ready to execute. And I'm going to come over to my desk. I'm going to make sure I'm on the NASDAQ chart here. And I'm just going to go ahead and click on the 5-minute time frame because that's where all the action is going to happen. That's how we're going to find initially the key levels that we're going to be trading, because step one of any strategy, right, is knowing what levels are we actually trying to trade. Because without knowing the levels, it's really difficult for you to know what to look for, right? And I'm going to show you how to find those levels very, very quickly. So again, 9:30 a.m. Eastern time, go on the 5-minute candle. And what you're going to find is that first 9:30 candle, once it's printed, this is your 5-minute candle, right? I'm just going to go ahead and get my horizontal ray tool here, or your trend tool, whichever one you want. I like using the horizontal ray on TradingView. And I'm just going to go ahead and mark the high of the candle here. And then I'm going to go ahead and mark out the low. And what that now gives me is a range on the 5-minute, right? So that's how high the price went within the first 5 minutes, and that's how low it went. Now, if I switch over now to the 1-minute time frame, we've got the top of the 5-minute range and we've got the bottom of the 5-minute range. Now, knowing those levels on their own doesn't really mean anything. We need to be able to understand what it is that we're going to do with these levels. And one of two things is going to happen. Either the price is going to trade up into the range like this, or it may trade low into the range like this, okay? We are looking for any one of these moves. We are essentially waiting for the 1-minute time frame candles to print into one of these sides of the range. Now, what does that mean? What has to happen is the candles need to close outside of this 5-minute range. So if I was to draw out the range with more of a structure like this yellow box needs to be essentially broken out of, okay? So let's keep this here so we can make this super clear. And I'm going to go ahead and play the sequence for a moment so you can see what happens here. Okay, great. So as you can see here, the candles have printed outside of the range on the lower side of this 5-minute time frame, right? Now, this is pretty much what we're looking for because what it's telling us is that price may be looking for a move to the downside. How do I know that? Well, this is the beauty of the 5-minute candle because this first 5-minute 9:30 candle that we draw gives us lots and lots of information about what the market wants to do on that day. Why? Because the 9:30 candle is when New York opens, and the New York session is the most volatile session, especially 9:30. That's pretty much the moment where we're going to get a big move in the market that gives us an idea of the direction in which the market wants to go for the day. So now that we know that price wants to trade to the downside of the range, we would essentially be looking for an entry at this point. So how do we find the entry? Well, There's some very key characteristics that we are looking for when price breaks into the range. So hopefully, if you're following now, you should know that if we have traded into the downside of this range, it means that the price is going down. So we want to be taking a short. But it doesn't mean that we just get our short tool here and we just enter randomly here or randomly here. Like, there has to be a very specific mechanical way in which we enter these trades. And the more mechanical you can make your process, the easier it's going to be for you to actually make money with this. All right. So I want you to essentially follow a very mechanical approach to how I'm going to do this. And that's going to give you something that you could take away and start executing for yourself. What we are looking for is a fair value gap sequence that is printing outside of the range. Now, what is a fair value gap sequence? Well, thankfully, we actually have one in this example. A fair value gap is when you get a three candle pattern where the low of candle one does not overlap the high of candle three. So if we take candle one here, candle two here, and candle three here, you can see that the low of candle one right there does not overlap the high of candle three. And I will change the color of this so it's easy for you to see. And what we'll do is we'll actually get rid of this 5-minute range color. We already have the level marked out there, the high and the low. And I just want you to focus on this here. This box here represents the fair value gap that has been formed. What's important for us to recognize is that the fair value gap has been printed outside of the range. As soon as we see this gap being printed outside of the range and confirming, then we can enter the trade. Now, what do I mean by confirming? Well, in order for this fair value gap to be a valid fair value gap, the fair value gap has to actually be formed. And the way that happens is when the third candle of the sequence has been printed. Because, for example, let's say this candle actually ends up trading all the way back to here somewhere or up here somewhere, then that means that this second big candle is no longer a fair value gap. It can only be a fair value gap if there is a gap, obviously. So once we have that gap, we can now essentially look at this and say, okay, cool, we've got a gap and the price has printed outside of the range. So now we can go ahead and take an entry. So what I'm going to do is I'm just going to go ahead and click the short tool here. And my entry is going to be on the closure of that third candle. So if this candle prints like this and that's how it's ended, then obviously my entry is going to be around about here. The actual entry would be around about here because this is a little doji candle. The price is actually closing up here in the middle here, not down here, not up there. And we know this because we have wicks on either side of the candle. The body of the candle was in the middle, which is where it's ended up closing. So the entry would actually be around about here. And then what I want you to do for the stop loss is we're just going to put it at the bottom of the fair value gap candle. Really simple. If this candle had a big wick, then you would also include the wick. Don't just go to the body. Please include the wick of the candle as well, because it's very essential that you give your trade enough room to breathe, okay? Having very, very tight stop losses aren't necessarily the smartest way to do this. You do need to give your trade a bit of room to breathe. And then all we're gonna do for the target is we're gonna have a fixed target. And the fixed target we're looking for is a risk to reward ratio of 2. So if you look at the middle of your short tool, you will see risk to reward ratio. All you're gonna do is you're gonna target it down until you get to 2, just like this. Now, if you're wondering why we have a fixed return of 2 or 2R, it's because it's important to have a mechanical approach to the way in which you take profit, okay? All you really need to do here is focus on executing the trade, taking profit where you're supposed to take profit. As soon as you start becoming discretionary about the way in which your targets work, that's when your psychology can bite you in the butt, because essentially it's going to get you to really hinder your decision making. It's going to make you get greedy. It's going to make you chase for more. It's going to make you have FOMO and all these different things. So just by having a mechanical approach like this really improves your psychology, because you have a set rule and set instructions. And remember, all we're doing here is we're just trying to build our furniture, right? We're just following the instructions and we're just doing what the booklet says. And the booklet says, just go for 2R and that's it. Okay. So that's all we're going to be doing here. So we can go ahead and place our position for this trade. We have a potential to do $1,700 of profit on this trade. So let's see how it plays out. And there we go. That's $1,700. And the target for this particular trade was hit in just 4 minutes. Is it always going to be 4 minutes? No. Unfortunately, it doesn't always work like that. But in this particular example, we were able to hit profit very, very quickly with this trade. So that is pretty much the model. It is as simple as that. You can watch that back again if you want. I'm going to take you through another example in a second, but I just want you to understand you don't have to complicate this. You don't have to make it any more than what you've just seen there. Keep it simple. Now, you might be thinking that just one winning trade doesn't make a good strategy, and you're absolutely right. In a moment, I'm going to show you another setup just to prove to you that this setup does work repeatedly. But more importantly, this is a setup that I actually teach to my community members in Cryptic Hustle, and it's something that gets used by all of our students every single day. In fact, just a couple of days ago, it was an execution that I took with my community, and many of my students took the exact same 5-minute setup as you can see here, and we all ended up walking away with decent profit with this trade. And again, that was simply using this one candle setup. Also guys, for traders who want to simplify their trading and get to profitability faster, check out my course, The 90-Minute Trader, where you get access to my entire trading strategy and trading tools, as well as my trading community, where you get to see my daily market analysis, my trade ideas, and get to connect with other traders who are making bank every single day. You also get a ton of other valuable resources that get you to profitability faster. If you want to go and check that out, just go ahead and click the link in the description below. Let's go ahead and take a look at another example. So once again, we are on NASDAQ on the 5-minute time frame. I have come to the 9:30 candle right here, and I'm going to take my trend tool. I'm going to do the high right there, and I'm going to draw out the low right there. Remember to include the wicks, and we're just going to switch over to the 1-minute time frame and see what's going on. So it looks like price is moving to the upside here, and let's just play and see if we get a break. Great. So we have our break to the upside. Let's move back one candle here. And let's take a look and see if we got our fair value gap. So I can see that although it is a small fair value gap, it is still a fair value gap, right? The fair value gap is just ensuring that the high of candle 1 in this instance does not overlap the low of candle 3. And whilst it is a small fair value gap, it's still a model entry that we can take advantage of. So our entry would be at the candle close. So price would be around about here. We would put our stop to the low of the fair value gap would be just there, including the wick, okay? And once again, we are doing a simple 2-hour target just to here. So we can go ahead and get this one ready for a buy. Our target here would be $1,900 with a stop loss at the low of $940 at risk. So let's go ahead and play this one out and see how it goes. Okay, target hit. So almost $2,000 on that trade. And this one took a little bit more time, you know, a little bit longer than the one that we previously saw. And it was a little bit more choppy in the middle of the trade. But once again, we're not even seeing any drawdown on this trade, which is beautiful. Doesn't always work like that, by the way, but sometimes it does. And we've got a nice easy entry with price going to target. I do want to reiterate that this model is not perfect. You are going to lose on this model. You're going to lose on every single model, okay? Because there is no perfect entry model. There's no perfect strategy. So you have to be really comfortable with the idea that trades are going to lose. But if you use this model over time and you execute over time over a large number of trades, you will see that this model is extremely successful over time. Now look, if you've made it this far, you genuinely have everything that you need to become a profitable trader a lot faster than it was for me. You understand the mistakes that keep most traders stuck for years, and you've got a simple strategy that actually works. It's been back tested and it's been used by hundreds and hundreds of traders in my community right now. But the crazy thing about this, right, and this is the bit where you have to be really honest with yourself, is that this probably isn't the first time that you've learned a strategy that should have helped you to become profitable. Most traders pick up really good bits of information, really good lessons, but they still struggle to stay consistent. And I know that because I was in the exact same place myself. It took me years to break that cycle of learning and implementing and actually becoming profitable, right? But what's funny is when I look back, most of the important lessons that I needed that I actually learned were really early on in my journey. I just didn't realize it at the time because I kept making the same mistakes and dragging the process out. And even after several years into this, I was still blowing accounts. And that's exactly what I don't want for people that are watching this video right now, or anybody in my community. And that's exactly why I built this YouTube channel. And it's also why I created my program, the 90-Minute Trader. I don't want traders going through the same thing that I went through for years, the stress, the confusion, the trial and error that I had to endure in order to become profitable. And inside our community, every single tool that we use, every video, every resource is all designed to shortcut the process of dealing with that pain that I had to go through myself. And when I teach people, when I'm coaching people, I always think about the younger version of Joey, the young trader that started this almost 10 years ago now, who was completely lost and overwhelmed and really wanted to get good at this and just trying to figure this stuff out on my own. And everything that I create is really just built for that person in mind who was inexperienced. And anybody who might be in that exact same spot right now, maybe it's you watching this video, because no trader should have to spend years trying to learn the hard way when there's a community and a system and a structure that can really fast track you in this journey to becoming profitable as a trader. Inside the 90-Minute Trader, you're not just watching lessons, you're getting access to the full ecosystem that I've built for serious traders. You get exclusive software tools, enhanced dashboards that track your performance, a full trading journal that I've built myself, and all the different tools that we use inside the 90-Minute Trader to stay disciplined and consistent. You also get access to all the strategies and the models that I use, specific models that I don't actually teach on YouTube, that are fully backtested, proven, and actually used by traders inside the community every single day who are posting wins and profits daily. Plus, we break down the markets on a daily basis, walk through key levels, and outline exactly what we're going to be looking for the trading day ahead. And whenever you need some clarity, you can jump into the Discord, you can ask some questions, and you'll get guidance from myself and from other experienced traders who are in there right now. Look, whether you ever join the 90-Minute Trader or not, I still want you to win at this game. And I'm always going to produce content like this for YouTube for free so you can go and learn it and you can execute and try this out for yourself. But for those of you who are really taking this seriously and want to build a profession out of this and want to use this to create new freedom and new levels of success in your life, you want to move faster, you want the tools, the structure, and all the models that are being used with a community around you, that's why I built the 90-Minute Trader. Look, you can do this on your own. It's just going to take you a little bit longer to get there. And it might be a little bit harder because you have to hold yourself accountable and you're the only person there that's doing this on your own, right? The 90-Minute Trader simply gives you the shortcuts that I never had when I first started out in this business. So if you're ready to check out the 90-Minute Trader, you can click the link in the description, join, and I'll see you in the community. And for those of you who've been watching my videos recently and subscribed to the channel, thank you so much. I appreciate you so much. And I hope everything that you're learning in these videos, you're actually going out there and executing and trying this out on the charts for real. And if you're new here, make sure you hit the subscribe button and the like button, and you can check out my new content on a weekly basis. Thanks again for watching, and I appreciate you.